Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis update is for January 19th through the 23rd, this coming week. Now, what I want to do today, folks, is discuss the charts, obviously, but I also want to go over the earnings this week because we're fully into earnings now for the first or the fourth quarter last year, and it's very important to kind of understand where these play out because some of the companies are direct participants in the market, meaning that they're going to be major movers for the overall market, or especially the weaker tech sector or the stronger tech, depending on how we're positioning ourselves. It's important to realize that the market could have a near-term effect based off of some of these earnings and the economic outlook coming up. So that's what we're going to do. We're going to discuss the economics, we're going to discuss the earnings, we're going to discuss the charts on all time frames, and really get down to the nitty-gritty to try to find out where this market's headed. Now, last week was a fantastic week, folks. I mean, there's no doubt about it in my mind that last week was an unbelievable week. Now, it was options expiration, and with options expiration comes insane volatility. We've said that for years now, that you have to be super cautious and not necessarily get too swayed by any one day during options expiration because the large money is going to push the small money around. It's a bullying tactic, and you have to be ready for that. So this week, you saw the markets absolutely go crazy. For instance, we had a big down days earlier in the week, followed by major reversal on Thursday, one of the biggest reversals we've seen in months actually on Thursday. And then Friday was a wild day where we gapped higher, and this is Friday's chart right here. This is Thursday's chart on the intraday 10-minute. And you can see the gap up on Friday where we had a hard sell right around to midday and then a massive reversal. And there's some key chart stuff that I want to kind of go over here. But number one, I want to just talk a little bit about the overall week. And again, that wild options expiration, you have to be ready for it. Every options expiration week, be ready for this type of volatility. 9 out of 10 times it will happen. Now, the volume last week really picked up mid to late week, and that's a fantastic thing to say because ever since the beginning of the year and late last year in 2008, you had gotten to this kind of, slow volume thing, and that's not necessarily a fun thing to see or trade, but nonetheless, the volatility had been sucked out. This last week, we got that volatility back. You saw the VIX start to go crazy again, which is a key component of understanding how much volatility there is as well. Now, a couple things on this intraday chart I want to note as the markets on Friday finished up 69 points on the Dow, NASDAQ was up 17.5 points, and the S&P was up about 6 points, so about 1% across the board averaged out. Now, what you did see on Friday was that gap up, but it couldn't hold. There was just too much selling. And one thing you want to note is the highs from this chart on Thursday play a key component or a key kind of trend analysis tool here to understand what's going on. And why do I say that? We'll draw this line across, and you can see how the market came all the way down and right through that level, and then you got that first little bounce mid-morning around 10:30 in the morning. Now, 10:30, 10 o'clock are key reversal times. You always have to watch for them, and you can see the 10:30 getting a little bounce here as the market came into it. The other thing you want to watch for is also gap fill, which is right here. And if you draw that out, notice how the market came down through the 20, and then right around that gap fill and 20 moving average started to get support. So you can see, and you want to watch for that gap fill always. When you gap up or gap down, gap fill can often be a bounce play opportunity, and you see that very clearly on the 10 o'clock, on the 10-minute intraday pattern on this chart. The other thing you want to note here is also the low here on the pullback off this monster reversal plays a key role. Why do I say that? We'll draw that line in beautifully, and you're going to see how the market came all the way down right to that point, and that was the buying opportunity of a century there, or at least for that day or week, as you got a key move back up. Now, the other thing I wanted to show you is you have to use Fridays or Thursdays or Wednesdays, the previous day's charts, to dictate key lines in the market coming up. And why do I say that? Well, not only do you see this line be a key thing, this line and this line all revert back to Fridays or Thursday in this case, since we're talking about Friday's market activity, you have to draw your trend lines, all your trend lines in as well. For instance, take a note of this. All right, if we were to draw this line here through this point, and notice how I'm drawing it through the low bottom here. So let's draw that right in. All right. Notice how the market virtually closes right on that point. So you take the low here and the lows, and really you can even look at this point right here as being in a little bit of a pivot area right here as well. As you got a pivot down and then a reversal back up, or a pause. Really, we like to call that a TNT or pause play. But nonetheless, that point to this point, and look at where the market closes. So you have a direct correlation there between that. In addition, if you want to take the low here and just draw this up, and this is even more amazing. So draw this to the closing or approximate lows down here, and look at what you get. You almost get parallel perfect lines all the way up. And the market is very symmetric, and there's symmetry in the market, and that's something you always have to remember, is that there's always going to be some symmetry to everything you do. That's why technicals work, is because if you can discover whether it's a Fibonacci retrace, whether it's trend lines, whether it's Elliott wave or Gann or whatever it may be, you can use all these various things to kind of come up with the correct analysis and put all the pieces of the puzzle together and get these lines and trend lines to make your trading way more advanced than anyone else out there. And I'll tell you, 99% of the people on Wall Street don't know this stuff. I mean, you're basically delving into the technical side of trading, which is 99% exclusive. I mean, 1% of the population will know this that trades. That's it. So it's very key to understand it, and you should all be taking our webinar. We have a webinar now on February 7th. That's Saturday, I believe, on February 7th. And definitely, if I could recommend something, take that webinar. It will blow your mind away with how accurate the analysis and things that we teach you that no one else knows out there. So you can sign up for that at inthemoneystocks.com. Now let's go to the 60-minute, folks. Let's flip over to the 60-minute, because here's the whole week, all right? And this is really more than the week. I go back much farther. You go all the way back to the 12/30, December 30th. But what you really want to focus on is what happened last week. You got the hard sell-off here starting on Monday. Tuesday was a wishy-washy day. Wednesday, a big down day. And we had told our premium subscribers on Wednesday not to be too alarmed by the sell-off, because options expiration was the week. And you have to understand that that's just a bullying technique. And so was Thursday. Thursday, you got that key thing, and then you got the reversal. And this is what we had seen in the charts, believe it or not. We had been seeing some key stuff going on here on Wednesday that was telling us that this is just options expiration volatility and not to be too worried about the big down move on Wednesday. Thursday, it was pretty crazy, because you actually started to sell extremely hard, but we kept and stayed to our guns, and sure enough, you got that late day reversal. And this is all the technical proprietary stuff we do, again, that we teach in the webinar and so forth, so definitely sign up for that. The other thing that I want to point out here is once you got the reversal, you actually got a nice retrace off this big move up. Now, those of us that have been trading and understand technicals understand how you got to have a pullback. When you make a move of this magnitude from here all the way to the gap up on Friday, you have to anticipate a little bit of a pullback. What you do get here on the pullback is a beautiful bottoming tail. And this bottoming tail is absolutely a key component in understanding that you're going to have another move up. You pretty much isolated it here on the 60-minute, and this is telling you, watch out, we're going higher. Now, next week is going to be an interesting week. Why? Well, Monday's off, and that's number one. And I'm going to flip to the daily now, and we'll go over a couple levels on the technicals. But Monday's closed. Then you have earnings like crazy. Now, we're talking about on Tuesday, IBM's going to report, J&J, Johnson & Johnson, and even a small one that I like to follow, Cree, which is a semiconductor player. That kind of gives you a general outlook of the semis. But again, IBM, J&J, and Cree, C-R-E-E, on Tuesday. Wednesday, you really kick things off. Apple and eBay. Apple's the big one because of the whole Steve Jobs nightmare that's been going on lately. All right, so keep an eye on that. eBay's at these days, it's not that big of a market mover, but nonetheless, two airlines reporting, AMR and UAUA, to watch how the airlines are responding to this oil being so cheap right now. Thursday, let's talk a little bit about Thursday. AMD and Google reporting. Google's going to be huge, guys. I can't stress how big Apple and Google are this week, because they're key components of how this economy is doing. Is if Google and Apple can show some definite growth and people can be reassured on the Apple and Google trade, you will see this market rip higher. If they come out and disappoint, be careful. Can't stress that enough. Those are the two ones you got to watch for this week. And on Friday, General Electric. General Electric will be a decent one. Nothing huge, but decent as well. Apple and Google are the big ones that you have to really focus on. Now, the other thing I want to point out is economically this week, before we get into the last little bit of the charts, economics, almost nothing. You got building permits, housing starts, and initial claims on Thursday. That's pretty much it. Nothing much more than that. You got crude inventories later in the week on Thursday as well, I believe. But for the most part, a dead week economically. Last but not least, I want to show you the key levels on this market. All right, and again, you have to join the research center to really get the understanding, and where we go over all the little things in this market that are so key. But these are all key lines that I can't stress enough, and they all have significance, whether we're moving there or whether or not it's a retrace level, and you have to join up to see, obviously. And again, these are all key lines that are extremely imperative what's been going on. You can see these lines we've drawn in on charts for now, I don't even know how long, but nonetheless, you can see how the market makes moves to them, and this is all based on research that we've put out to our premium subscribers in the Research Center. And by the way, the Research Center, we're going to be adding a new thing in that over the next 2 weeks. It's going to involve our watch list, all our day traders, swing traders. We're compiling the pro watch list and going to give that out to everyone. one, so stay tuned for that. All right, folks, have a wonderful week. Good luck trading, and be safe and enjoy. Take care.